Okay, and so what's up, everybody? Welcome. Dirty River, if you didn't know, thank you for coming. Tonight we are going to be talking trade plans. It is a topic that we cover. I try to cover it a lot. Toasty tries to cover it a lot. It's just something that, everybody should have if they try to trade. As I mean, Ton of people DM me. I get tons of DMs. I've probably had DMs with most of the people in here. I'm always happy to answer questions. And the main thing that I see when I'm talking in DMs to people is just a lack of a plan. I very frequently get messages that are like, either, oh, I'm down bad, should I cut? Or, oh, I'm up huge, should I sell? And as soon as you ask me that question, I know that you didn't have a plan for your trade. And if you plan out your trade, it will really just what's up, Bryce? How are we doing? If you plan out your trade, it will make your life a million times easier. Because then ideally, before you enter the trade, you know at least approximately how much you could lose. And you also know at least approximately how much you can make. And so that's a very, if you know those two things, one of the main things that I see happen to people, yeah, there we go. God, I just love Jerome Powell. But so one of the most common things that I see people do is they're in a trade, it's either going really good or it's going really bad, and they freeze up. Oh, what up, Flips? How we doing? They freeze up, and when you freeze up in a trade, that's when you start to make really bad decisions. Like either you're going to hold a loser for too long, or you're going to not trim winners and let them go red, or whatever it is. We see it all the time. People say, hey, I'm up, I was up 25%, but now I'm down 30%. Should I cut? And you should have really just never let yourself end up in that situation. And so today what we're going to do, and I'm going to kind of, I'm going to try to ask questions as we go, or we can kind of see what people are thinking, and as we look at the charts. And it's hard because we can see the whole chart, and hindsight's always 2020, but we can start looking back at charts after we build our little plan and say to ourselves, what do yeah, struggle scalping with Robinhood for sure. It is not, that app is not made for speed. And so what we're going to start with is just kind of, I'm going to show you what I do for any trade plan. This is only going to take us, for 5-10 minutes, something like that. We're going to talk real quick about something everybody can do. When you wake up in the morning, you'll see Flips in VC, you'll see all kinds of people talking in the morning about things that we're seeing. And so I'm just going to show you what I do in the morning. I'm going to pretend that I don't trade SPY all the time. And so we have, no levels on it or anything. And that's what I'm going to, this is always where I'm going to start. I am always going to start on the daily chart. And so the first things I'm going to look for, I'm going to say, are we near any major trends? I'm going to look at this one and say, well, we're a little ways away from that trend. One of the other trends that I like to look at is, any of these like shorter time frame trends. A lot of the time you'll be able to see those a little bit better on something like the 4-hour. So you can see coming into today, and I'm just basing it from this first, major higher low right here. You can see coming into the day, we were at an interesting point on that trend. But then we want to go back to the daily. Daily's looking kind of ugly with that trend, but we're just going to go with it. And look for anything close to us in the area that we've been trading. I'll remove this so we can see a little bit better. We of course have to ignore this candle for now, but we want to look here and we want to say, hey, yesterday's high, probably pretty important. Yesterday's low, also probably pretty important. One of the next things we want to look at is, have we taken any big rejections? You might notice we took a very similar rejection back here recently. Next thing I'm going to look at, nice consolidation right here. We see this kind of thing where the market was just in indecision for a couple of weeks in that middle, or, a week in that middle of October. So I always want to take note of where the market was stopping and where the market was, doing most of its bouncing. And we can pretty comfortably say that's around that 432.30 area. We have some below it, some right off it, some barely above it, but we know this is the area that we want to be watching. So next thing I'm going to do, once I'm, happy with all of these, something that I always preach to people, always pull up, at least, in my opinion, your major SMAs, your simple moving averages. I like to look at the 20, 50, and 200 on the daily. They're the really common ones. And take note of where they are. Because this will kind of help you on your bias. Trend is up, bigger time frame, technically trend is down, even bigger time frame, trend is up. So for now, we know trend is up. Well, now I want to look at where is this major SMA sitting. So it's sitting 432.91, 432.92. We're close enough. At this point, we have some levels for the areas that we're trading in. We could even put one more right here if we want. Just that's a nice little rejection that we took off there, rejection off of there. Going to the 5-minute. And for now, I'll turn off the SMAs so they don't bug us, For now, we want to pretend today hasn't happened. We're pretending this is the homework we do in the morning. You saw that. It took us a couple of minutes to find some levels that we want to trade around. Next thing I'm going to look at, I want to find the pre-market low, the lowest low, and we'll make this one red just so we can see it a little bit better. I want to find the lowest low, and then I also want to find the highest high. And that's what, when you hear me or anybody else talk about pre-market high or low, that is what we're talking about. And so that's what I'm going to watch into the day. And now, we haven't traded today. We have some nice levels. They're all from previous days on the chart. The only other thing that I really want to look at is any trends that have formed in those pre-market hours. So something that I like to do is just kind of draw out this pre-market trend wherever, it happens to be. And now that we've done this, we have levels to trade. We have a trend that we're watching going into the open. Obviously, you can put the top one on as well. It didn't come into play today, so we aren't going to talk about it. But we can start watching this. Now, something that I personally like to do, I'm always going to check out VWAP. And then the other one that I really like to look at, maybe this one's not for everybody, but is this, I'm a really big believer in the 20 EMA on the hour. Give me 1 second. So on VWAP, if you're ever curious, I don't use the lower and upper band on VWAP. You can turn those off. I just like the mid band. Okay, so this ugly yellow line we got here is the hourly 20. Purple line is VWAP. Green up here is the pre-market high. Red down here is pre-market low. Everything else we see on here is just major levels that we got from the day. So, some people are great at scalping the open. We got flips in here. Everybody knows flips hits bangers on that first candle of the day. Not everybody can do that. And until you have a bit more experience, I always recommend you let the market play out. Everybody knows that, like, the opening range that sets at an hour and a half into the day. I'm not saying you have to wait that long, but let the market make some things obvious for you before you start looking for trades. And so as we come into the day, and we can look, we'll zoom in so we can see this day a little bit better. As we come into the day, we have pre-market high above us and we sell instantly. And so this is where we're going to start getting into building our trade plan. So we're 1 5-minute candle into the day. We're below VWAP. We've rejected pre-market high, but we have the hourly 20 right here. So these are going to be things that I look at as far as building my bias into the day. And so this is what I watch. We also happen to have our trend lining up with the VWAP and with the VWAP with that hourly 20. We have a lot going on right here, so we can kind of assume that this is going to be telling. This is the area that we want to watch going into the day. So then we let 20 minutes of market play out. We have some buying above VWAP and off of that hourly 20, and then a big sell. So at this point, we're maybe a half hour into the day, and then this is where I kind of want to start asking you guys questions. We probably want to be looking short, right? For all of these reasons. And so this is how I build my bias on the day. I say, are we below important levels? Are we below VWAP? Are we below the hourly 20? At this point, we can start to look to get short. I'm trying to not go too fast tonight, so hopefully everybody's understanding what I'm saying. really simple. You want to keep everything simple. People love to try to short blind or long blind or whatever it is. And this took us less than 10 minutes to form our trade plan. We have all the levels we need for the day. You don't even have to have a bunch of EMAs on. I'm not going to turn on EMAs today. I love them. Obviously, Flips loves them. And most anybody who day trades uses some EMA combo, but we're really just going to talk about what we are seeing on the charts. And so one other thing that I notice right off the bat, and this is just trying to show people, my thought process to build my bias on the day. Once this candle right here has formed, you could even make an argument for this one, but I'm going to go with this one today. Once this candle right here is formed, you have set your official first lower high from the open. So I'm going to put that trend there. You can see I removed the pre-market trend. I'm going to put that trend there. So we know after this rejection candle, we can start to look short. Does everybody see? Nobody's saying anything, so I'm assuming everybody's understanding. Does everybody see why we can say that? Why there's not a lot of reason to be looking long right here. We see a big sell candle. We're below EMA, or we're below VWAP. We're below hourly 20 EMA. This is where you look to get short. Now that we know we're looking, we're feeling bearish, we have all kinds of things to, give us our bias on the day. Yeah, we sat here. Did we miss a couple of trades? We, maybe, but for very safe, calm entries, this is the type of thing that I look for. Now that this has closed, I don't like to short the bottom of a red candle. So what I'm going to do, and you can see this one didn't give us a great bounce. What I am going to do is wait for any sort of relief bounce on this up towards this hourly 20 or VWAP right here. It is important to remember these are lagging indicators. All indicators are lagging, especially hourly 20. That's why it's flat. It's because this thing updates once an hour. But we can say right here that we can start to look short. So this is where we start to actually build a trade plan. We have watched the market play. We're under our pre-market trend. We're under VWAP. We're under the hourly 20. We have set a lower high. So we are technically in a downtrend. Once you have one lower high set or one higher high, it doesn't matter. You are in a trend, either up or down. You never know how long a trend will last, but we now have our bias and we haven't had to rush anything. We can have been watching this candle form and say, if it closes below the hourly 20 or the VWAP, I am going to look to get short. Close below both of them. So that's pretty good confirmation to, if you see any bounce up to here, short it. So we're going to start to put some circles on here where, and I talk about this in my one-on-ones or in DMs with people, when we go back and analyze trades and we go back and talk about trades, we have hindsight. So we get to be exactly right. And everybody knows that when the market is actually trading, it can be harder to make decisions. It's not, actually pulling the trigger is somewhat difficult. But so we're just going to say we entered here. We don't know where we entered on this candle, but we entered here. What we need to do as this candle is forming, we know our plan is get short below here. Well, now we need to plan the other parts of our trade. Entry. So now we've talked entry a little bit, and this is where we want to enter. We know that we want to enter below, as close to this EMA or this VWAP as we can, short. It's always rough to short a big red candle, but we know this is where we want to look short. So we now have our entry planned. We know the parameters that we want to be met for our entry. Well, now we need to plan what, to me, is the second part, most important part of a trade, and the part that nobody talks about, and the part to me that matters a whole lot more than any money we're going to make. Now we need to plan how much money are we going to lose if we stop out where do we want to stop out? And so this one is a very, very cut and dry trade. How you stop out will, of course, be up to you, but I'm going to touch on a couple of things right here when we talk stopping out. For me, I wait for a candle to close. The market can do really, really funny things in the last 10 seconds of a 5-minute candle. So I like to wait for a candle to close. The problem with waiting for a candle to close that, not only does it, screw me sometimes, it can screw other people. And if you're a person that finds yourself maybe not stopping out when you should, waiting for the candle close might not be the best idea for you. However, with this trade right here, we know that our stop out is going to be, you can choose a close over the hourly 20 or a close over VWAP. So when I look at this type of thing, this is where I start to analyze my potential risk to my potential reward. And so, then does everybody see, just hopefully get some, engagement. Does everybody see why we stop out here? Our plan says enter here. So when we're wrong, we stop out here. Does everybody understand that side of it? Yes, we'll take that as a yes, no answers. So our stop out is up here. Now we analyze our risk reward. Let's say we entered at 437.40 for ease of math. We are risking to the upside up to basically 437.60. So at 437.60, we are risking 20 cents of upside. So we know that is the risk on our trade. We're risking 20 cents of upside. So what I do at this point, and this isn't for everybody, but when I look at option contracts, I love looking at delta. I love looking at theta. I like looking at the Greeks. So if we are risking 20 cents of upside, say our contract has 40 delta, we know that we are risking about 20-25% of our contract of 1 delta on our contract. So if our contract has 40 delta, we are going to lose approximately $10 per contract if we have to take the stop out up here. Now we know our stop out, we know our risk. So now we can position size accordingly. Say in this trade that you are willing to risk $50. That's what you want to risk. Well, now your stop is $10, give or take, and we're rounding all these numbers to make it easier. And it's a little harder during market hours, of course, but we know we're risking approximately $10 a contract. We're willing to risk $50 total on the contract. So we can now say, I can comfortably trade 5 contracts, and that still falls within my parameters of, where I want to stop out, how much I'm willing to lose, blah, 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 blah. So we can enter that trade. Well, we're getting there. We have to plan the other side. But this is where waiting for a candle close can go wrong. It can cost you more money than you want. So all of us talk about mental stops. All of us talk about things like that, how we like to stop out of trades. Something that I realized I probably haven't talked about enough, and something that I do on every single trade I enter, if I enter a trade, I put on what I call a protective stop. And so we're going to kind of use these previous candles to show you, but we'll keep talking about this trade real quick. So we know that our stop is approximately here. Well, up here where these previous highs are, we know that if we push above that, we likely want to get out of this trade, because there's a pretty good chance we are really, we're going to push out of this trend. Or even if we get way up to this trend, that is going to be a loss that we likely don't want to take, especially if you're trying to scalp some same days or even, weeklies on a Thursday or something like that. So this is where my protective stop is going to go. And that stop is going to be there, likely a little bit above it, because in case the market does something tricky and wicks all the way up there and sells down. But I am always going to have a protective stop. And if people did this more on their trades, then it would really, really protect them from getting into those situations where they have just held a loser for way too long. Because at that point, you're forced to stop out. You're wrong on the trade. That's all there is to it. So we can actually look at these previous candles and kind of see what we think. Again, you shouldn't buy calls on the tops of big green candles. But say we get this nice bounce off down here, 437, get a nice bounce, and we say, okay, I want it because this lower high hasn't been set. I want to scalp calls if we, if we close above the VWAP and this EMA. So when we look at this, a lot of people buy calls at the tops of green candles and they get scorched because the IV is high, or the bottoms of red candles, even kind of like we're talking here. And they get scorched because the IV is high, blah, blah, blah. Maybe entry's not good. Well, we're going to pretend we enter this trade right on the close of the candle. We get a quick pop. Oh yeah, this is that 7 o'clock news candle. We get a quick pop, but maybe we don't get sold. Well, our plan could have been, hey, we'll stop under VWAP, Well, that's great if the candle closes close to VWAP. This is one of those candles that's a really prime example of maybe you entered calls right here. You didn't get them sold. Well, I'm going to have my protective stop down here under the 20, no matter what. A little bit below it just in case they do try to do a wiki thing, but I'm going to be pretty dang close to that 20 on the chance something exactly like this happens. Because you can see, our plan was stop out here. So our risk was relatively small, 20 cents or so. Maybe we were looking for this 40-cent push up to here, one risk, two reward, understandable trade. I get it. Well, when this candle forms, I don't remember how this worked during the day, but I'm assuming that we got a little bounce and this thing sold heavy. Well, if you have your protective stop here, you're getting out, beat up a little bit, but you're getting out of the trade. And for the people who held through this, even on this bounce back up to here, there is zero chance that a same day or a next day contract went into profit right here. So you save yourself that protective stop, and that's exactly what it is. It is protecting you from this type of situation. So we go back to our trade here. We want to enter here. We plan on stopping here, protective stop somewhere up here. So we now know our entry, and this is all part of the trade plan. We now know our entry. We now know where we're going to stop out. So now we get to look at the other side of it, and we get to say, how much, what kind of downside am I looking for? And so the first downside target that we're going to look for is this 437.20. It's a small move, obviously, but it is the support level that was, it was technically held. This is what we have from the daily. It was the support level that was technically held. So first target is going to be that. And you get a nice quick 20-cent flush, you're going to be up 10% on a contract, something like that. Next target is this 437 right here, where these wicks had bounced. So the first target, 437.20, you're basically one risk, one reward. Not an ideal trade, but a great place to take a trim. All the way down to 437, you're now at one risk, two reward, which is a great trade. Of course, this candle sold really hard, so you would have made more, but any other time, you trim a lot of your contracts away right here. 50% of your position, something like that. When you hit first profit target, that is where you want to take off a bunch of your position. If you are still in short, you want to come all the way down to here, 436.50-ish, the red line. You guys remember we marked this is pre-market low. So that is going to be our second take profit. And where basically most of your position should be taken off. If you catch the nice $1.50 flush or $1.25 flush on SPY in a couple of candles, you take advantage of that. Your IV is really shifted in your direction. Your contracts are going to be up as much as they can be at that level. So you want to take off most of your position here. So now we can look at this trade. And we can be planning all of this ahead of time. We can see this push up. We can see this lower high getting set. We can start to look at contracts. We can see that the trend is forming. All of this can be done while this candle's forming. We're building the plan. And if the plan works, then we trade the plan. If the plan doesn't work, then we don't trade the plan. So That is what we want to do before we ever enter anything. And so those are, I want all of those parameters figured out, and they can all be going on while this candle is happening. We got 5 minutes to build a trade plan. It took us, it took us longer than that, but if we were just doing this, banging it out, this takes a minute to figure it all out. And it removes all questions from your trade. And so the very final thing that I like to do when building a trade plan is, and this is something that I've always done. I think everybody that's a real trader does it, whether they know it or not. But Shark just explained it in the best way possible. He said, any trade you are going to take, you need to look at the bullish and the bearish side of it. And if you're looking to short something, but there's way more bullish stuff going on, then obviously don't short it. So that's what I'm going to do on this trade. And I'm going to say, we're potentially setting, like, for the trade plan that we are looking for, all of the things that we are going to say is, we are hopefully setting a higher low. We are below VWAP. We are below pre-market high. We are below the hourly 20. And you can say seller volume increasing, blah, 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 bunch of things to look at. But specifically on the charts, we are looking for more bearish things than bullish things. Now, when we go to the bullish side, the only thing that I see, and chime in if anybody else sees this, I'm seeing on the bearish side, obviously setting downtrend now, lower high, below VWAP, below hourly 20. So I have 4 bearish things. When I look for something bullish right here, I see big bounce off the 437. That's what I see in the bullish category. So we got 4 bearish things, 1 bullish thing. To me, that says short it if you can. Like, if you get a reasonable enough entry, if you can get a little bounce, if anything like that happens, then you are able to short it. And when we short it, like I said, as long as we have everything planned out, then we know our risk, we know our potential reward. So there's nothing to worry about. There's no reason to freeze in the trade. We know, every parameter of the trade. So we know exactly how it will go. Whether it goes the right way or the wrong way, we don't know. But we have done everything in our power to say, my trade plan is right. I am going to do the best that I can to enter this trade. And so, does everybody get that? Is there any questions? Is there any, did I go too fast? Do you see, the things that I'm doing, the things that I'm looking for? And if not, let's talk about it, because trade plans are huge. Everybody should have some form of trade plan for every single trade that they are going to take. And so if you have any questions, let's ask them. Let's get any trade plan details worked out. And then if not, I'll show you another couple trades that, that were potentially good entries for us on the day. But I would much rather answer questions and make sure everybody understands all of this. Ricky, let's see. When taking risk reward on same days, does a 10-cent move against you loss equal 10-cent move for you and profit? So it depends. The issue with the same day is that they are decaying so fast. It all comes down to the velocity of the move. If it happens quickly, then yeah, they're gonna, so without getting like super into detail, it will move against you. So if it moves against you, you'll lose value on the contract, and you will lose value to IV. However, when your delta, so this is going to get really technical for a second, I apologize. When it moves against you, the IV is going to shift against you, and you are going to lose value on the contract due to gamma reduction. Gamma is what reduces the amount of delta on the contract. So as this goes down, maybe your delta was 20. Well, when it gets up to here, it's going to be 19. That's, that might not be exactly right, but say your delta was 20. Up here, it's going to be to 19. Well, when it shifts the other way, it will go to 20, or it'll go back to 20, but then it will actually go to 21 because gamma will be increasing the delta when it moves in your direction. So that is why you see those weird shifts. And then theta is why we don't get back to the same, if we enter here, our same days aren't in profit here. But it's the gamma and IV shift that the 10-cent move up is likely going to pay or hurt you less than the 10-cent move down is going to pay you. Does that make sense? I hope. So understanding the approach from pre-market. I'm not exactly sure what you mean by that, but I'm willing to bet it was because, and we'll take these, here, we'll take this one off for now. I'm assuming you're asking about the trend. So I always draw a trend because I love trends and I trade trends, and they make, about the most obvious thing in the market. The market is going up. The trend line is pointed up and to the right, and the simplest way to think about it, market is going up. Once it's below there, we can start to say market is now going down. The market is going down. It is no longer setting what we call higher highs and higher lows. The lows are higher than the previous lows. The highs are higher than the previous highs. So we want to use this for our bias. There was actually, so yesterday, I drew this trend into the open. As soon as we started, testing below here, I started saying to myself, hey, I'm going to start looking short. And so I didn't catch this, but on this bounce back up to the trend, this was one where, that pre-market trend set you up really nice for an early short in the day to end up catching a pretty nice move down. So that's always what I look for. And then the other side of, the pre-market stuff, just to kind of touch on it too, is the pre-market high and the pre-market low. And they are just the levels where, there's very little volume. This is SPY, and, we have, somewhere 20,000 volume, some all the way down to 13 volume. The stuff that goes on in the pre-market is a lot of big money funniness. So you want to take note of, where did the sellers give up? Where did the buyers give up? Because more often than not, those levels will provide a rejection. Obviously, this, like we talked earlier, this was the bond market sell, but you can see you were pretty dang reasonable to be looking to get short here when we were not able to reclaim that pre-market low. Of course, we had Powell at that economic symposium, but it wasn't even, he talked a little bit about the American economy, but it was more a discussion of how economics works than anything else. A few really smart people talking. So a pre-market high will low will frequently either be a bounce or rejection point, or it will be the point where a big breakdown or breakout comes. So to me, any trend that is formed in the pre-market, always worth noting. And pre-market high and low, always worth noting. There are many, many days where those pre-market high and lows, we can see this was the pre-market low yesterday. It just so happened to be a level. Another great breakdown, even with the retest of it, to be short. Here's a different one, kind of the opposite end of the spectrum. This is, was, and we'll put it on here just so we can have a little bit more visual. This was pre-market high. The second we broke above it and started retesting it, you can start looking to be long if we're going to hold above it. So they will frequently be those and they are technically the breakout or the breakdown point of the day. So to me, those pre-market high and lows just offer a very, very obvious level that everybody should watch. You don't want to short at pre-market low until you have some pretty confirmed selling below pre-market low, because there's a good chance buyers will show up, as they did earlier in the day. Obviously, it didn't work into close, but you don't want to be short until that break, sort of thing. And then the other ones that I love, and we marked them from the daily. So I probably should have marked them on the 5-minute chart. Oh yeah, and we didn't even get them. So this level right here, and we'll make it a different color. I marked them on the daily, so they weren't exactly accurate. Previous day high, and another one, we did get closer on this one. We'll make it orange too. Previous day low. Those are levels that play very, very well. You can even see the bounce up today rejected it to the cent. This one, that actually was even more confirmation that we didn't even have to be looking short. Great levels to trade. Pre-market high and low, previous day high and low. I recommend them whenever I do my simple trading plan. They're always included. You want pre-market high, you want pre-market low, you want previous day high and low as well. And you can see even today offered great rejections off of it, a nice little short into close. Those early rejections off the previous day high. This was another one. If we were looking to get short, that is obviously a target where you likely want to be taking a lot of your position off, obviously the previous low and then previous day low. But those are all things that I always, always, always take into note. You don't want to be shorting them. One that I saw today, Tesla was absolutely throttled today, However, when you start seeing this kind of stuff and we're bouncing and we're holding, this is not where you want to be getting short on something like Tesla, you just want to look at the chart and see what does the chart tell you. And if the chart is telling you like I had to go back a little further. This 206 was a serious breakout point the other day that resulted in a $20 run on Tesla. So when you look back on the charts and say, hey, something really, really important happened here, don't short Tesla in the hole. You don't, Tesla's down. It was at one point, it was down like 6.5% on the day. You don't want to short Tesla when it's bouncing and it's down 6% on the day. These are the types of places where you want to go bottom fishing and look long with a stop below there, because if we break below there, easy stop out. It's likely going to 204.75 or whatever. And then honestly, it could go lower than that, back down to that 200. But you don't want to be short there, like everybody wants to short things after they die. Nobody wants to short them up here, but everybody wants to short them down here. And so it's just, it's that balancing act of looking at the chart and seeing what does it say to you. And that goes back to, if you're trying to get short down here, I don't care what pattern you think this is. If you're trying to get short down here, you got to look at this like hard bounces off that bottom. We know this was the breakout level from earlier. For me, I am much more likely to be looking to get into calls here. Obviously, I think Tesla's wildly overvalued. I've never longed Tesla. But you want to be looking at calls down here. You don't want to be looking at puts down here, because you have more reason to think it's going to bounce than you have to think it's just going to break down and die, So that's what I do. And that all goes back to, your bias and saying, what does my bias say? Tesla's down, it was down $14 or whatever. Do you want to short Tesla when it's down $14 and hope for more? Or do you maybe want to try to long Tesla and see if you can get a couple buck bounce? I know a couple of people, Chris hit this one, sick bounce on Tesla, Oh, we got Norvin in the house. Yeah, you're a little bit late. Okay, so that's what I really wanted to cover. Simple trade plans. They're very easy to set up. And you can use them every single day. You should use them on every single trade that you take, because entry is everything. Something that I always tell people with entry, you can turn a great trade or a good trade into a great trade, or you can keep a bad trade, not very bad, as opposed to making it horrible, and so that's, entries are key. Stop out is key. Every trade you take, you should know your entry, you should know your stop out before you take the trade. As long as you have all of the bias in your favor, you've set up all of your plans. Tesla put Gunter low, I know. Oh, poor Gunter, I need to change this. I just love roasting people on charts. But once you know your stop out, you know your entry, you know all of that, then you can start to take trades and you can start to not freak out in trades. And, something I talk about a lot, like when somebody messages me and they're in a trade and they're down 60%, And I'm like, well, yeah, you probably should have stopped out a long time ago. And then they message me later and like, oh, market rift or market died or whatever. I'm back in profit. And I'm happy for you because you made money, but that is absolutely terrible trading. That is not uh that's not how you want to trade. That's not really trading. That is that's just gambling. That's just getting lucky. You don't want to be the person who holds things for like huge moves against you that just gets saved by something happening in the market. You want to have everything planned. And risk as little as you can to make as much as you can. Because when I see somebody they're down 60% and then they're selling for 10% profit, you literally had a 6 risk 1 reward trade, and those will blow up your port super quick if you keep trying to trade like that. So it's all about just being super careful. So that's my spiel. Let's answer. Yeah, it's gambling. Let's answer some questions. Any questions about trade plans, things that people traded today, things that people like to trade, maybe something that people want to trade tomorrow, and we can kind of start to think about what goes on tomorrow. You don't really want to predict or anything, but we can do some of that. Or if people have questions, whatever you want. Meta on the upside. Meta gave all the upside it needed today. I mean, I hope people are out of that thing. That thing ripped. I mean, it was up $11. Looks bad. Well, I mean, look, we're actually making this pretty we're making this pretty easy on ourselves going into tomorrow. Meta, let's look at it on the daily. I mean, definitely not time to be thinking short on Meta or anything like that just yet. I mean, today is basically just a knees sell-off day. I mean, this 315 level is likely going to be just sort of the spot to watch on Meta for me tomorrow. If you can get a retest of it, you can obviously try to catch those longs for a bounce right there. It really got smoked after hours, though. Does anybody know? Some job cut news. Some job cut news. I mean, honestly, to me, I just look at this right now, and to me, that 315 level is super obvious. It is the place where you either want to be, long off a bounce off of it, targeting. I mean, this thing, it's been wanting to make a move. It keeps on trying. But you want to be long off that thing, 315 up to like 320 probably. Not in one candle or anything, trim on the way up, obviously, hopefully. But that 315 is likely the level that I would be trading off if I was trading Meta tomorrow. Oh yeah, we'll go over some SPY here in a minute, 1K. Yeah, we can look at IWM2 Norbit, but that one you're not gonna like my answer on. Let's see. How can you avoid getting stopped on tricky wicks? You can't. We didn't really, I mean, SPY wasn't like the most wiki thing today, Let's go back and look for another one. Are they? I mean, so the thing about tricky wicks, you just need to trade your plan. And if your plan says, stop, like if it hits a protective stop, which happens, the protective stops I talked about that you set on any trade, your maximum you are willing to get scorched, they can hit. But say you're short SPY here, you want your stop up here. If you have a place, like when you look at any trade, and you'll hear me and Flips talk about it, if you're trading something and you think that you might get like a bounce up or you might get one of those tricky wicks, what I always try to tell people is, don't set, like if you think you might get a wick up to this 437.20, we're just going to use a random level. If you think you might get a wick back up to this level, maybe where a breakdown came, you want your stop a little above it, because on occasion we have a price level that just smacks like on to the cent, but rarely are they perfect. So you always just kind of want to add that stop a few cents above it if you can, or below it, or whatever it is, so that you give the market that little room to breathe. However, it does have the issue of, maybe you're trying to short spot here because it can't get back over 437, but you want maybe you want to wait for a candle close over 437.20 and you get walloped into close, you know. So it is just that double-edged sword of doing it. But when you're setting your stops, you typically want to give them a little bit of leeway around a level if you can. Okay, IWM for old Norvin. Here we go. IWM looking terrible still. Hope Mike's not in here, but seems like there's at least a chance it would want to fill that gap down to there. 166 definitely the level where you want to be looking to either play a bounce or get short below it. But IWM is just in this tricky situation right now where it is 100% dependent on what rates are doing. Nobody will be buying small caps if rates are ripping. We can see what has been going on for the last few months as the rates were going up. IWM was getting demolished. They will always go hand in hand. So while we might have a really nice technical setup to play on IWM, you want to be very, very cautious. If rates start ripping, IWM is going to get torched. We saw it today, so that's kind of what you have to prepare for. Nice, happy you like that. Yeah, those previous day highs and lows are huge. Nvidia. Man, we shouldn't even talk Nvidia. Nobody should be trading Nvidia. And we can't laugh at my levels. I got funny ones on this one too. That one smacked today. I mean, Nvidia is a tricky one. Obviously, a pretty big rejection on that 474. But it's just not a train to jump in front of. Like, everybody has an obsession with shorting this thing. I'm sure that Zabe's likely has an open trade on Nvidia right now, so I don't want to, I'm not talking bad about his trade or anything like that. But Nvidia has been a dip buyer's mecca. Like, let's just zoom out a little bit. So let's look at Nvidia. When you look at this chart, every single dip has been gobbled. So you can, for sure, you can make some, you can make some money shorting this thing. It makes like really huge moves, but you need to look at the chart, look at the grand scheme of things. I know that for the last couple of months, we've been stuck in an $80 range or whatever it is, and shorting at the top of a range makes sense. There was no reason to short Nvidia here, here, here. I mean, you look at this chart, and sure, there was a couple nice times to short Nvidia, but it is a thing that just be very, very careful jumping in front of the train. I mean, this thing flushed what, $20 today, something like that, probably a little less than that, $15 today. You got to be very, very, like, that can wreck you. This wrecked shorts, this wrecked longs. So just be very, very careful trading Nvidia. I wish people wouldn't trade it because of how it moves. But for now, you should basically always be looking to buy the dip on Nvidia. It is a tried and true method all year long. I'm not saying dive into longs tomorrow, but as long as we're kind of, up in this range, I'll probably still be looking tentatively long on Nvidia. If we start to look like we're going to maybe start giving some up, then you can look to short it. But there's very, very few reasons to be like just short on Nvidia out of nowhere. I mean, let's be real. Calls have paid like millions of % this year, and puts have got obliterated. Baba. I don't even like talking to these. There's no reason to even talk about China stocks. I mean, they do their completely own thing all the time. The Chinese economy is a little touch and go right now. I mean, wow, look at that. It is doing a nice trend retest, but I just don't trade these China names. They're too news influenced. They're too just random. Like, I mean, like, market can be ripping, they can be dying. Like the China trade is a very, very hard trade to hit. I'm sure a lot of people likely want to try to play this trend bounce right here. I won't be trading it. I mean, this thing could super easily flush to like 80 and then be back to 86 a couple days later. And I just don't like the uncertainty on things like Baba. I trade them very poorly, if I'm being honest. So I just don't trade them. I don't like trading them. But for the bulls, look for a bounce off this trend. For the bears, look for a break below the trend short. final goal would be that 79, of course, but still just not a trade that I'll personally be taking. Norvin, you and your SMCI. Look at so we'll just make Norvin happy. So back here in January, Norvin was in my lectures every single day saying, SMCI, SMCI, it's the next NVIDIA. And we all said, ha ha, yeah, whatever, Norvin. And now SMCI ran to 357. So yes, Norvin, it was sick. I'm still not gonna trade this crazy thing though. Tickers I think that are best for beginners to trade. AT&T, Coca-Cola, XLF, XLE, Pfizer. There's a lot of them. The cheapies. Those are the ones like, they grow ports in a hurry. Like AT&T, for example, today, they're really nice because you can buy it in the money, so they don't, they won't go worthless. There is intrinsic value, so they won't ever go to zero. And I mean, it's hard because you'll look at this AT&T chart. It looks like it made a huge move. It moved 20 cents. However, the 16 puts did 95%, I believe, on this drop right here. So they can pay very, very, very well. Then, say we shorted this 1573, our stop out would have been above here. It is literally a 2-cent move up. Your in the money contract will lose $3, give or take, on that bounce. So that's that's how you trade them cheapies. Pfizer, another great one. Just getting throttled lately. It was just an unbelievable short. Wow, that thing is smoked. Pfizer, another really great one. Same thing though, not going to make huge moves. A dollar move for Pfizer is a really big day for it. Like 2.4% day is only 73 cents. But because of that, you're very, very safe trading things in the money because it's just not going to make a huge move. It's not going to blow you out of the water. Great question, Kelly, on chasing trades. It's hard to say, are you chasing a trade or are you not chasing a trade? If you see this kind of a candle, you do not buy puts on something like this. Those dramatic news candles, like, did it work? Sure, but it was so sketchy to do it. Something like this, you can say, hey, I am chasing. Maybe I'll look for a bounce to short. That's reasonable, but on something like this, your risk reward just gets blown so out of whack that you don't want to trade it. However, on this one, where we can, the trade we talked about earlier, where we can really build our thesis and say, I am entering this trade for a reason. Was the previous candle a 60-cent candle or something? Yes. So you might feel like you're chasing, but you build your plan, you build your thesis, and that is how you'll start to differentiate between, am I chasing a big drop, or am I taking a very reasonable entry with a very tight stop, blah, blah, blah. And so, because on something like this, if you do short the bottom of this, on a candle like this, you have to have a wide stop. So if you short it down here, realistically, like a real trade, your stop needs to be up here. So you don't want to risk that amount of money, not knowing how far this can go. And in the end, this likely ended up being about one risk, one reward trade, which isn't good. But you have to watch this kind of thing happen, not enter, see if you can get a bounce to short. Because, there's a very, very fine line between hesitating and making the right choice. And a lot of the time in trading, just waiting that couple extra seconds will be the right move. Yeah, man, Jack Ma did go into hiding for like 2 years. That was wild. Uh, you're trading Unity now, huh? You're you're in Unit, yeah. Well, Norvin, you swung calls into ER. We don't even need to talk about this trade. Don't do what Norvin did. Yeah, there you go, JCT. Man, it's a printer. Yeah, CCL, Bank of America, Disney, Riot, all of those are great. Shop is good. I like Shop a lot, but man, those contracts move so funky and they have such low liquidity that I've been steering away from Shop a little bit more lately, but it's a great one. XLE, XLF, of course, other great ones. What's Shop doing right at that 60, huh? Every candle just looks so bad today that They gotta buy it tomorrow. Yeah, but that's it. Oh, we can look at SPY. Let's look at the daily on SPY. It's God, I just have funny names on all of them. Okay, so looking at SPY, for me, there is basically one thing on this chart that matters right now, and it is this level 432.91. Somewhere in here, 432, we'll call it, yeah, right there. That is the level that every trade I take tomorrow will be based off. If we come down to it, I will 100% looking to be playing a bounce. If we break below it, I stop out. No big deal whatsoever. But that is the level to watch into tomorrow. As long as we are staying above this 50, so we're gonna actually pull up something else to look at. Because people talk about it all the time, got no idea what they're looking at. So I watch VX. Get rid of all these. I watch VX. It is the volatility futures. And so it's something we should always take into note. Everybody thinks, they don't understand what the VIX does. But what the VIX does is the VIX tells us the expected volatility in the market. And it shows us which side is winning. Higher VIX and bears are winning. Lower VIX and bulls are winning. So you don't want to chart VIX. You don't want to do falling wedges. You don't like a gap fill on VIX. You don't want to do any of that. You want to pay attention to these big round numbers, 15, 16, 17, 20, whatever it is. And you want to look at this and you want to say, we look at the chart and we say, okay, when VIX broke below 17, doesn't matter. Don't put that level on the chart. But when VIX broke below 17, the market started ripping. That was showing the buyers were going to start buying dips. So when we look at VIX now, we know that as long as it is below this 16, 17 area, obviously we got a really big bounce out of it today on big selling today. As long as the VIX is staying below, and like I said, I watch a VX. I'm sure VIX is different, but I watch a VX. As long as we are below this 16, 17 area, I will likely continue to look to buy dips. Because dip buying has been working with this low volatility in the market. I will continue to look to buy dips going into tomorrow. I don't think today was a day to dive in and swing calls or anything like that, but I do know at this point, this is the level that matters to me, and watching VIX to see are the buyers or are the sellers winning on VIX. And if the VIX buyers are winning and we're breaking below this level, I look to get short. If we come down to this level and the VIX sellers show up really, really heavy, I will be looking to get long. That is an extreme generalization, but that's what I'm looking for in the market. We'll see what happens. QQQ, very similar situation, but honestly, when you zoom out to QQQ on the daily, we're still looking pretty good. Like I personally would not be swinging short on tech right now. I'll tell you that much. I mean, this is a breakout retest. Until it's not a breakout retest, this is a breakout retest. So again, QQQ going in tomorrow, we got our SMAs way below us. We definitely, if we break this trend, we will go visit that sooner than later, but going into tomorrow, I'm looking to buy dips on this thing as well. Going into Friday, we'll of course see what happens. There's no telling what the market will do, but I got my simple levels, my simple trends, and the VIX on my mind, and that's all I'm watching going into tomorrow. Oh, look at that, 6:05 already. If you got to get out of here, thank you so much for coming. Great questions tonight. I really appreciate y'all, and we'll see you tomorrow. But if anybody's got any other questions, I can answer them real quick. But if not, we'll call it a night. Yeah, right on, Ricky. Thank you. Yep. Kelly, yeah, thank you, everybody. Thank you. Yeah, drop some turkeys in the chat for me. Yeah, thank you, everybody. Okay, right on. Well, with that, we will call it a night here. Thank you, everyone, so much, and we will see you tomorrow. Be safe on Friday.